confirm the doji. You're waiting for the opening because the doji is actually confirmed on the close. But if you want to wait for the opening on the next session, that's fine. The question is, would we sell on the opening of that candle? We don't know it's going to be a black candle, and I'm going to throw it open to you. I'll ask you, would you be comfortable selling on the opening of that right after the doji? Yeah. Okay. And why?
I would sell because in my mind that's enough confirmation. We have the resistance.
Right.
We have doji confirming the resistance, and you have the bullish candle before, and isn't that a shooting star also?
The
doji.
Okay.
I don't know. I think in my mind
Okay, so she's saying yes, the doji is confirming resistance area, which is fine. That's one thing we should be asking. What else should you be asking? What's the risk reward?
It's a small. Well, we don't know.
We do know the risk reward on that. Yeah. I would.
Previous support.
Yeah, I would think this would be an okay risk reward trade. Right. Right. So we're using the prior lows as our target. Do we get our target based on the candlesticks? No. Okay. We're getting it because it was a support area. We're getting the reversal based on the candles, the doji confirming a resistance area. Also, the doji confirming the resistance area is another reason we're using Western technicals. Nothing more basic on Western technicals than resistance. So the doji confirming resistance area, and we're using the Western technicals for the price target. However we use measured moves, somebody had mentioned the bull flag before. Any patterns you use on the bar chart, obviously you could use on the candlestick chart. So for example, here we had one change of polarity, how the market broke above resistance area, and it became support, didn't quite get down to that level again, but old resistance became support, and the market was in a boxed range. If you remember what I said before, how do we get a measured move with a boxed range or a lateral trading environment? What do we do? Right, measure the height of the range, and whichever way the market breaks out, you add that. So you'd have, and I'd be conservative. I'd go to the top red line rather than the bottom one, and this would be my target, conservative target. Doesn't mean the market's going to stop there, but the point is, whatever you use for patterns on a bar chart, use them with a candlestick chart. Yes.
Still wait, like in your case, follow this scenario. See, once it breaks the resistance.
Okay, the question is, once the market breaks resistance, do we wait to see if it tests the support before buying? Right, because the problem could be if it gets above the resistance area and can't hold above it. Right. The way we look at it is that once the market has a tall white candle there, we're bullish. The market broke above resistance, we're bullish. What price says we're wrong? If it closes under old resistance becoming new support. But on a tall white candle like that, I would be bullish. And I would be buying it and keep a stop under the old resistance becoming new support.
So in this case, it is trying to even test it,
right? It came down to a couple of sessions later. If you're looking at it in intraday, you may find some reversal signals down there. Yes?
And your target is the width of the range?
The target is the width of the range, right? And I would use that to take some profits. I would never, ever initiate a new position based on a target. I would never go short just because it reached a target. If you get a bearish candlestick signal at a target, then we can think about it. And just an example here. Here's normally an ascending triangle normally happens during a rally, but doesn't always need to be that way. An ascending triangle is the market is trading horizontally, you have higher lows. And when is an ascending triangle confirmed? How do you know when is it an ascending triangle? When the market breaks out of it. Okay, it's building one, but it's not confirmed until the market closes above it. And you can just take your measured move from the ascending triangle. Okay. Again, box range is one of my favorite measuring techniques. Okay, so in other words, here the market broke under the support level. By the way, as soon as it broke support, what became resistance? That's what. So this is getting back to Sharish's did I pronounce it? Question. You know, he was talking about a resistance level. When it breaks resistance, do you wait for a pullback? I said no. If it breaks a resistance area, we'd be buying it. The price we'd say we're wrong is if it comes back below the support area. Same thing here. As soon as the market closed below the support area, short. The price, there's always a price that says I'm wrong. The price that says I'm wrong is old support should become resistance. If the market closes above that, we're wrong. And actually, more than wrong, because it would be one of those crack and snaps. That would actually be bullish. But I would be short on that with a stop-out level above that horizontal line, the bottom red line. And what we do is we take the height of the range as a potential target. Yes?
So see, on this pattern, if you had gotten a failure on the downside and it cracked and went back up,
Right. The question is if we had a failure and it moved back up.
would you reverse the trade and go long?
Okay. The question is, would we reverse the trade and go long? If you have enough psychological wherewithal to say, I'm short, I'm wrong, I'm going to go long, yes. So we're continuing now with head and shoulder, Western technicals. Here we have head and shoulders. So once the market breaks under the neckline, it becomes a potential sell signal. So once the neckline is broken, it's a bearish signal. And by the way, in Japan, the head and shoulders is called the three Buddha pattern. And that's because in Buddhist temples you have a large central Buddha, and on either side you have two smaller Buddhas or saints. And this was around in the 1700s in Japan, and the head and shoulders was around in the 1920s in the US, and just shows how universal and timeless emotions are. And that's what technicals measure. Okay? Fear, greed, hope. There's a wonderful quote I had, and this is just, you know, not from a Japanese source, but just to show you the universality and the timelessness of emotions. The world is too big for us. There's too much going on, too many crimes, too much violence and excitement. Okay, try as you will, you'll get behind in the race in spite of yourself. It's incessant strain. You try to keep pace and you lose ground. Science and all those discoveries move on you so fast that you stagger beneath them in hopeless bewilderment. The political world seems so rapidly changing that you're out of breath trying to keep up with it. Everything is high pressure. Human nature cannot endure much more. This was written in 1833. Has anything changed? Isn't that amazing? So human nature, timeless, and that's what this is why we have the same pattern emerge in Japan as in the West, because technicals gauge the emotionalism of the market. Fear, greed, hope, they're all reflected in the charts. So here we happen to have an inverted head and shoulders, and just I want to show you these because it shows how you can use Western technicals on a candlestick chart for measurements. This one, that measurement, I probably would be totally out of long positions on that measured move. Why? It may be a little hard to see on the screen, maybe a little easier in your handout. What did we get at the measured move? Okay, so what the measured move is in the blue vertical line. It looks like in April. The opposite of the piercing. The dark cloud cover, right. I wouldn't go short, okay, because it's not really confirming resistance, but I certainly would take profits. Okay, here we have a bear flag, which was confirmed when the market broke, or bear pennant. Now, this is interesting. Here, like in the prior slide, we have the dark cloud cover confirming a target. And here, the same thing. We had a target with a bear flag. Essentially, what you do is to take the height of what's called the flagpole, and you take that from the bottom end of the trading range of the pennant. This is actually a bear pennant. If it's triangular, it's called a pennant. And if it's like a parallelogram or rectangle, it's called a flag. And the target is shown by the blue dashed line. And right at the target, in that red square, what I've done is I'm going to blow up that red square because it's a little hard to see.